Bismillahirrahmanirrahim. This is Abdul Basit Sohail from Lahore, Pakistan. These slides will give you sufficient information about Islamic banking, Islamic finance, and the difference between Islamic and conventional banking as well. Rules and the principles used in conventional banking are man-made. They can change these rules and principles according to their need. But the rules and the principles used in Islamic banking are divine based. They cannot change these rules and principles beyond the limits of Quran and Sunnah because these rules and principles have been derived from Quran and Sunnah. There is no Sharia board in conventional banking because they don't claim that they are doing business according to Sharia. So there is a Sharia board in Islamic banking which looks after and makes sure all the transactions are executing according to prescribed Sharia manner. Amount collected by the current account from conventional banking, they don't any specific mode for current account. But for Islamic banking, they receive the money from current account on the basis of Qard account. So on this Qard contract, they can use money for their investment purpose. Bank is liable to pay on demand. Amount received by current account in the conventional banking because they don't claim and don't differentiate between permissible and non-permissible activities. So that's why they can use these amounts, these funds in non-permissible activities as well. But Islamic bankers cannot use these funds in non-permissible activities. The amount received in saving banks by the conventional banking is also without any specific underlying mode. But Islamic bankers use Mudarba contract with the objective of return on investment. In Mudarba, one person gives or provides money and the other offers his services. Same as conventional bank can invest this money in all type of activities, either permissible or non-permissible. But Islamic banking is confined to invest the funds in permissible activities only. The relationship in conventional banking is the relationship of debtor and creditor. But so far as in Islamic banking, there is the relationship of Rabbul Mal and Mudarib. The capital provider is Rabbul Mal and the service provider is called Mudarib. Conventional bank deal in short selling, sale of debt, in speculative transactions which are prohibited in Sharia, but Islamic banking cannot deal in short selling, in sale of debt and receivables. Conventional banking provide funds to all type of industry, to all type of company, but Islamic banking cannot provide funds to those companies, to those industries which cause harm to society. For example, if an industry, if a company is dealing in alcohol and tobacco, so that company cannot get funds from Islamic banking. Conventional banking treats money as commodity, so that's why they lend it on interest. Islamic banking considers money as medium of exchange only. Compensation in conventional banking is always interest, but compensation in Islamic banking is always summon or price. There is no question of dubious transactions in conventional banking because they already are doing business in non-permissible activity. So, what to talk about dubious activity? But Islamic banking, they do business in permissible activity. So that's why if there is any particular dubious transaction, so then profit from that dubious transaction cannot be allocated to the profit of that bank, that Islamic bank. So that profit from that particular dubious transaction will be allocated to charity account. Conventional banking charge fine and penalties for late payment and from defaulters. But Islamic banking cannot charge fine from defaulter or for late payments. Conventional banking always considers creditworthiness of client for providing the loan, but Islamic bankers consider viability of the project for financing. Conventional banking lend and get back the money on interest, but Islamic banking actually participate in business, in ijara, in lease, and in partnership musharaka base. Conventional banking may charge for not maintaining minimum balance, but Islamic banking cannot charge for minimum balance. But in conventional banking, the West gives a ruling, the West makes a rule, and all the world have to follow that rule. But in Islamic banking, Muslim jurist give his opinion, give his ruling. So that ruling is followed by all the Islamic banking. Conventional banking has a motive of profile of maximizing profit without any restriction, but motive of the Islamic banking is same to maximize profit, subject to the Sharia conditions and subject to Sharia restrictions. Risk is transferred from one to another in conventional banking, but risk is shared in case of Islamic banking. There is no concept of loss sharing in conventional banking, but there is concept of loss sharing in Islamic banking. Jazakumullah khaira. May Allah forgive my mistakes in content and concept.